Hey guys, welcome back to Bitcoin Dorks. In today's video, we'll be diving into a concerning topic, the alarming rise of money lost to crypto Ponzi schemes in 2022, which has surpassed the losses caused by hacks and exploits. So, let's jump right in and explore the details. According to a recent report from CoinMarketCap, the year 2022 witnessed a significant increase in the amount of money lost to crypto Ponzi schemes. These fraudulent schemes have been plaguing the cryptocurrency space, targeting unsuspecting investors who are eager to profit from the digital currency boom. Let's take a closer look at the data to understand the magnitude of the problem. The bar chart on your screen illustrates the alarming increase in money lost to crypto Ponzi schemes throughout 2022. At the beginning of the year, the losses were relatively modest, with the chart showing a modest bar indicating the amount lost. However, as the months progressed, the bars on the chart began to rise significantly, indicating a steep upward trend in the losses incurred by unsuspecting investors. By the end of the first quarter, the losses had already surpassed the previous year's figures. The chart illustrates this by depicting a sharp rise in the bar, symbolizing the significant amount of money lost during this period. The trend continued into the second quarter, with the losses showing no signs of slowing down. The bar on the chart climbed even higher, highlighting the rapid growth of Ponzi schemes and the increasing impact on investors' finances. As we moved into the second half of the year, the losses reached unprecedented levels. The bar chart illustrates this by showcasing a towering bar, signifying the substantial sums of money that had been siphoned away by fraudulent Ponzi schemes. Finally, as the year drew to a close, the losses peaked at an alarming height. The final bar on the chart represents the staggering amount of money lost to these schemes in 2022. It serves as a stark reminder of the devastating consequences that can result from falling victim to fraudulent investment operations. The rising bar chart effectively portrays the exponential growth in money lost to crypto Ponzi schemes throughout the year. This visual representation reinforces the need for immediate action to combat these schemes and protect unsuspecting investors from further financial harm. By highlighting the scale of the problem through the rising bar chart, we aim to create awareness and encourage a proactive approach within the crypto community. It's crucial that we collectively work towards identifying and exposing these scams to protect both current and potential investors. To better understand how a Ponzi scheme operates, let's delve into a diagram that illustrates the step-by-step process of this fraudulent scheme. At the beginning of the scheme, the con artist, often posing as a successful investor or financial expert, presents an enticing investment opportunity to potential victims. They promise high and consistent returns on investments, typically far above what legitimate investments can offer. This pitch appeals to the investor's desire for quick profits and financial success. With the initial investors receiving their returns, they often become enthusiastic advocates for the scheme. They spread the word, encouraging friends, family, and acquaintances to invest. The con artist may even offer referral incentives or bonuses to further entice new investors. This phase is critical as it ensures a constant influx of fresh funds to sustain the scheme. To maintain the illusion of profitability, the con artist provides investors with falsified statements or account summaries that show consistent returns. These documents are carefully crafted to instill confidence and reassure investors that their money is growing. This false sense of success further encourages existing investors to reinvest and attracts new ones seeking to join the seemingly lucrative opportunity. As the scheme progresses, the con artist encounters challenges. At some point, the number of new investors decreases, making it difficult to sustain the promised returns. The con artist may resort to delaying payments or offering excuses to buy time. However, ultimately, the scheme becomes unsustainable, and the chain is broken. When the scheme collapses, it unravels rapidly. Investors realize that they have been defrauded, and panic ensues. The con artist may vanish, leaving behind devastated investors who have lost significant sums of money. Unfortunately, recovering the lost funds is often a challenging, if not impossible, task. In many cases, the mastermind behind the Ponzi scheme disappears into thin air, leaving behind a trail of financial ruin and shattered trust. With the con artist gone, investors are left to face the aftermath on their own, grappling with the reality of significant financial losses. Recovering the lost funds in the aftermath of a collapsed Ponzi scheme is a daunting task, often filled with challenges and obstacles. Unfortunately, the nature of these schemes makes it incredibly difficult to trace and retrieve the money that has been siphoned away. In some instances, the funds may have been dispersed across various accounts or used for personal gain by the con artist, making recovery nearly impossible. The diagram provides a visual representation of how a Ponzi scheme operates, highlighting the systematic nature of the fraud. It's important to note that while the diagram simplifies the process, Ponzi schemes can vary in complexity and execution. By understanding the mechanics of a Ponzi scheme, investors can be better equipped to recognize the warning signs and protect themselves from falling victim to such fraudulent schemes. Remember, if an investment opportunity appears too good to be true, it probably is. That concludes our discussion on the process of a Ponzi scheme. If you found this information valuable, be sure to subscribe to our channel for more educational content on cryptocurrency markets and important news. Thank you for joining us today.